Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 16th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data coming out overseas, but here in the United States we have all kinds of it. Let's start with across the pond in Great Britain. They did get the unemployment rate, came in slightly better than expected at 4.8%. And here in the United States we got PPI, which is Producer Price Index. That came in at unchanged, below what was expected to be a 0.3% increase. We also got the core PPI, which came in at negative 0.2%, was expected to be a positive 0.2%. Those two economic data points are showing no inflation whatsoever. As a matter of fact, it's actually starting to ebb back a little bit, probably due in part to some of the recent oil pullback that we've seen coming into that data point. That would have been before yesterday and today. Then we also have capacity utilization came in at 75.3, was expected to be 75.5, so capacity utilization rate came in a little bit lower. Industrial production came in at which was expected to be an increase of 0.2%, albeit it was better than last month's that ebbed off a little bit to negative 0.2%. Then we also got the housing number, which was the NAHB, which is the National Association of Home Builders, came in at 63. That's right in line with what was expected to be 63. Then the big number, we got crude oil inventories, came in at a build of 5.3 million barrels, was expected to be a build of 0.4 million barrels. So that has steadily started to increase. Now, I talked about quite a while ago now that there was a lot of oil out there due to some of the hurricanes we saw on the East Coast and in the Gulf. That is looking like it's all starting to come online, aside from the fact that there's a glut of oil out there with Iran increasing its production on their side of the OPEC, and then we also have all of this oil that's coming online. So a huge increase in oil, despite the fact that we did see that number come out just a little bit ago. Crude oil still moving a bit higher at 75.95, was in the 76 handle earlier, but has since pulled back just a little bit on that one. I have a trade that I put on because of that inventory number, and I'll talk about that here in a little bit. But onto gold futures, up just slightly on the day. Looks like it may have found a bit of support down here, and right in line with where we saw support the last time, and it continued to come back up to the highs of 1377 there, but finding support down here right around the psychological level of 1200. On the bonds again also showing support today, up about a half a point on the day, up 13 ticks, really starting to settle down here. Good for those people that were hoping to refinance and got that huge sell-off, but don't know that we're going to make it back up there anytime in the near future. People are going to start to wait to see what all these Fed governors are saying about interest rates. They do seem to be talking pretty hawkish on it, but as we saw in these latest numbers with the CPI and the PPI, those numbers are not reflecting any robustness in the economy. It's also not showing any inflation, so just keep that in mind. I think they're going to hold off going into this next meeting in December. The Dow Jones Industrial Average down 67 points. It's starting to look like that sector rotation that we saw out of tech and into Stocks that are in the Dow Jones and in the Russell, you saw the rut. The rut was just going through the roof also with the Dow Jones. I don't usually pull up a chart here on that, but IWM, which is the ETF for Russell, is also cruising higher, but has since started to wane a little bit at these upper levels. So it looks like that rotation out of tech and into the small caps and the blue chips is about done anyway. As you can see with the NASDAQ up 13 points on the day, so we still have that flip happening where it's kind of like people are picking bottoms in a sense in the NASDAQ, finding some good stocks out there for value. And in the meantime, some of the ones in the Dow and the Russell are a little bit overinflated. So it's looking like we're getting a bit of that switch back as they were getting pushed out of line in a sense. But the NASDAQ up 13 points on the day. E-mini S&Ps slightly down on the day, down almost 7 points. But again, it's right up here where the market has found value. As you can see with the breakdown on the 15-minute chart, it has just been a boring last 4 or 5 days, just nothing going on. And especially, I thought we'd see a little bit more volatility with all these economic data points coming out, and there's just really no follow through whatsoever. But the E-mini S&P is down just slightly on the day. Onto a few things that I've done. Now, with General Mills, ticker symbol GIS, I have on a synthetic long in here, which hasn't really worked out, obviously, as you can see with the market here, but I do have a synthetic long on there and had it as a covered synthetic long in a sense, where I was rolling. I'm long at 65, but I'm rolling calls out against it. I looked to roll those calls again. There just was not a lot of premium in there, so I just decided to cover the covered part of this synthetic long in General Mills. So I had on the November 65 calls and covered those for 4 cents. I think I ended up collecting about 50 cents for those, and if I did the roll, I was only going to be able to collect about another maybe 25 or 30 cents for them, and I really wanted to move those up and out to like 67 and a half calls, but I was only going to get like 9 cents, so it really wasn't worth it for me. So I just figured I'd just take off the covered part of that and wait for a little bit of expansion and volatility. The other thing is if I rolled those out, I was going to be experiencing increased volatility as we would near this binary event. So I just decided to take that off and not deal with it, and hopefully just get my rally back. Take advantage of that way. Onto XOP, which is the ETF for the gas and oil exploration. This is an exploration and production. So if oil starts seeing a pullback, this is going to be hurt by that as well, as it's an ETF on all of those. So I went into XOP because it has low implied volatility. I did the December 38 puts and paid $1.60 for those. I did it pretty small, but I am looking to add some short deltas to my portfolio, as I talked about earlier on in this week. So many of the things that I've been doing is looking to find ways to add short deltas. LUV, Southwest, LUV, ticker symbol, was part of that whole rut and the increase of or benefiting from that sector rotation. It looks like since that is done, I've decided to take a little bit of advantage of that being overdone to the upside and bought some puts in there as well. So in ticker symbol LUV, Southwest Airlines, I went into the December and bought the 46 puts for $1.75. So looking for that to get a bit of a pullback, and I'll benefit from that way. But I don't like to do a lot of that whole debit spread, so those are the ones that are debit options. So those are the ones that I've done quite small, but it is adding overall negative deltas to my portfolios. All right, so Friday's webinar is going to be on the iron butterfly. Hopefully we can get some increased volatility before that, so we can have a little bit more opportunity to find different stocks to put that in. And I'm going to be talking about all my rules about that, how to build that out to increase your probability of success. So that should be a really good one. Hope you guys can all make it. If you can't take that, take it easy.